Welcome, traders. This is Wellness Mateer, your Forex trainer slash coach. I'm here to help you, guide you, train you, motivate you, share with you strategies, ideas, concepts to help you become a profitable trader. Now, is there any guarantees? Of course not. No guarantees in nothing. There's no guarantee that tomorrow will come. There's no guarantee the sun will come up. All we do is prepare for the opportunity to capture wins, to capture pips, to capture momentum. Okay, so we can ride the momentum of the market, whether it's up, down. We can make some money in the market. We could be profitable traders if we know how to chart the charts, predict with the direction of the chart. All right, in some sort of an accurate sense of the mind. There's never any accuracy, but if you could set traps, you could look at the chart and say, okay, the chart's doing this. If it does this, I'm gonna get in. Last week I talked about creating a trading plan, putting together a roadmap, parameters, things that you need to have in place before you actually take a trade. Okay, things I wish I would have known before I started trading is number one, don't jump in the water without knowing if it's hot or cold. Because you can see a pool of water and you say, oh, that's a swimming pool. Let me go ahead and jump in. But guess what? It's been out in the sun all day long. If nobody maintained the purity of the pool or the coolness of the pool, you'll probably be jumping into a hot pool. All of a sudden you're like, I wish I knew it was hot. So you got to test the pool. You got to make sure that it's at the level that you want it to be in that before you jump in, right? So assess the market, analyze the market, do your technical analysis. This is all, when you look at the charts, you're looking at doing technical analysis to the best of your ability. Some people say, Forex trading, it's gambling. No, it is not. No, it is not. Ladies and gentlemen, there are people getting paid thousands of dollars at a hedge fund, at a bank, at a insurance agency who are trading the money that is in their deposits. Okay. And they taught them specific strategies, what to look for, parameters, to go with the trend, to follow the trend, to, mark up the charts based on resistance and support levels, placing trades on demand and supply levels, things of that nature. There's a mathematical science behind trading. And if you understand what that science is, you can write your own paycheck. What would that paycheck be? Do you want to make an extra $50, an extra $100, $1,000, $2,000, $5,000, 10, 20, 30, 40, $50,000 in 1 month? Imagine extracting $50,000 from the market every single month. I mean, I've been following traders on YouTube, okay? Successful traders trading 100 pip, 100 lot sizes, right? 100 lots, right? And they know exactly when to place their order. And when that order is placed and it goes in their direction based on the trend, they can walk away, and they have walked away. And you guys seen the videos. They have walked away with $100,000 in profit, $200,000 in profit, $300,000 in profit. Okay, to the point where now they're able to live the lifestyle they've always wanted to live. Buying Lambos, buying Rolexes, going on trips, vacations, paying off their bills, their debts, supporting a loved one through, paying their school fees. Just think about that. If not this, then what are you going to do? Are you going to depend on the JOB to help you become a mega multi-millionaire? How many millionaires you know is working for somebody else? Think about that. I know a lot of thousandaires, $100,000, people who make $100,000 at their JOB, doing really well for themselves, who probably have saved over the time frame that they've been on their JOB, or turned themselves into a millionaire within 20 years, but it took them 20 years. But in this particular profession. I want to call it profession because once you learn the skill set, nobody can take it away from you. Number one, just like somebody taught you how to ride a bike, somebody taught you how to drive a car. Once you learn those skill sets, all the mental memory that goes beyond driving an automobile is automatic to you now. You know where the brake pedal is. You know how to put it in park. You know how to put it in drive. You know how to make a right turn, left turn. You know how to go straight. You know how to go fast. You know how to go slow. All this now, I mean, you know, based on mental memory, right? Reading, same thing. Somebody taught you your ABCs through Z's, right? And you could put words together because you had to find out what those letters were. You had to pronounce them, and now you have to create sentences and learn the words and structure and all that. All that you've learned from kindergarten to high school and beyond, right? So why can't you teach yourself this? Yes, you do probably need a mentor, someone who could hold your hand through the whole process, who could, who's been through the minefields of what to do, what not to do, right? Hopefully that's me. You could choose me as one of your mentors, someone who can guide you through the forest and get you to the other side, right? But there are a lot of people out there who could teach you the Forex market, but you got to find those people who are sincere, who are legit, who have a passion beyond measure. Okay, you got to be passionate. You got to be consistent. You got to be doing this on a regular basis, to find the opportunities to help you become profitable. Okay, this is not something you do when you have 5 minutes. No, this is something you do when you have 24 hours in a day. You have to do it on a regular basis. You got to be consistent. You got to dive into the charts. You got to read the charts. You got to back test. You got to practice your strategy. Okay, over and over and over. There are times I fail. There are times my accounts are negative. There are times where it's positive. Okay, but I'm starting to have $1,000 days. $500 days. Winning days that are actually earned $500, $1,000, $1,500, $2,000. Okay. Their days are, like I said, negative 100, 200, 300, 400, 500. And you just got to stop, reassess, and adjust. Pick up the ball when you drop it. Okay. So let's dive into the chart. I'm going to mark up this chart. You'll have an opportunity to see exactly how I mark it up. And if you want to do the same thing I do, follow in my footsteps. Because the great thing about this profession is this, and you probably learned this in school. Do not copy anybody, right? Do not look over anybody's shoulder and try to write their answers onto your sheet of paper. That's called cheating, right? But that was because you were trying to get a grade. They had to tell you that. But in this profession, you got to copy the right cat. Once you copy the right cat, it's okay to do what they have done so that you can get what you've always wanted in life. Okay, so it's important to understand that. There are a lot of people that you can copy from. So this is a big puzzle. You just got to find all the pieces and put it together. And once you put all those pieces together for your puzzle, that's when you start living your dreams. You start paying down your debt. You start extracting an income on a regular basis. Okay, there are full-time traders or part-time traders. Whatever you want to be, you can be. Just decide to be. It's a decision away. Everything's just a decision away. You want to wake up at 7 o'clock in the morning tomorrow? You set your alarm clock. You make a decision. You made that decision way before 7 o'clock came. You put a reminder on your phone, clock, whatever, and you woke up at 7 o'clock. So you want to be profitable in the market, you got to decide that you want to be profitable in the market, and you learn the basics, learn the fundamentals, implement, practice. All right. So with that being said, let's dive into this chart here. Now, I normally start, like I said in previous videos, I do a top-down analysis. I start from the higher time frames. And when we say higher time frames, we're talking about the daily, because each chart is different, okay, based on the time frame. One daily candle, just on the far right. On the far right, the last candle on the far right. These are all candles. If you haven't read the book, the study audio book, the Candlestick Bible, go ahead and get that. It's on my it's on my YouTube channel. Oh, by the way, if you haven't subscribed, hit the bell button, get notification if you have future videos or other videos like this, and subscribe. Tell your friends about this channel as well. Anyway, all right. So the very last candle. These are all candles, right? The very last candle is a daily candle, which is a 24-hour candle. Okay, every candle is 24 hours in duration. Within each candle, there are movements. Okay, you see a white candle, you see a bullish movement, meaning it's going up. You see a black candle, you see a bearish movement, which means the market is going down. You have to understand that. So the very last candle, I'm going to mark this candle right here. Right? Very last candle. You need to understand or read what this candle. Okay, every candle has a name, so to speak, but it also gives you direction. Okay, so this very last candle, okay, is called what class? You guys should already know this. Check your past notes. Make sure you get your notebook, get your pen, and tell me what this candle is. If you're watching this on a replay, go ahead and put it in the description area. This candle right here is a gravestone candle. Okay. This candle right here tells you a direction, a potential direction of where the market's going. And a gravestone candle means reversal, means it's going in the opposite direction. Okay, so let's verify that. We're going to verify that based on looking at lower time frames to see if this candle, right, which is a gravestone candle, if it turns black, because it was white, right? It opened up white, but now it pulled itself all the way back. It potentially may turn black, which is a reversal. Okay, so let's take a look. Now, before we do that, right, I want to take a look at the overall direction of the market. Okay, so my very first question is, okay, what direction is this market going? Are we making higher highs and lower highs? Okay, and the answer to that question is yes. We are making this whole trend, right? Started down here and it went up. This is a high, and it pulled back. This is a lower high because this low is higher than this low, so we call that a lower high. And then we shot up here and made a higher high. This high is higher than this high. That's what we call a higher high. Then there's a pullback, right, on lower high, which this candle is higher than this area here. Pulled up, higher high, pull back, lower high, pull up, higher high, pull back, lower high, but wait, it went below this particular low here. So that's potentially a market structure shift because it went below. Whenever you see a low go below a low, there's a market structure shift happening, meaning the market's trending lower, is reversing, it's going in the opposite direction. Okay, but wait, it went high. Did it make a higher high? No, it didn't. So at this particular point, you mark it, and now all of a sudden it went down here again. But it didn't go lower than this low. The wick did, but the candle did not close below this area here. So what happened is we call that a double bottom, right? Double bottom. You gotta know this, people. Call that a double bottom because whenever you see a double bottom, it's a potential where it may just change direction and make a higher high. Okay, so it went here, then went here, then went here, then went here, and then made another high here. Okay, then it pulled back, which is now a lower high because it's now higher than this low, right? But wait, is it going to make another higher high? Is it going to make another higher than this point here? It has not. Instead, what it did was started to consolidate, right? Went left, and shot down here, made a low. We're past both of these lows here. Market structure shift. Because why? It didn't make a higher high, but it did make a low. So at first we're on an uptrend, right? And all of a sudden, the trend is changing because look at this. It tried to make a higher high, but it didn't. It fell short. Okay, it fell short at that particular juncture. Now look, when it falls short and gives you a gravestone, it's telling you that it has exhausted itself. It's not going to make another higher high, because in order for it to make a higher high, it's got to pass this area right here. We call this area of interest. We call this area an area of resistance. We call this area right here that if it was to break this area and come back and touch it and bounce off, you got your higher highs. But it's not there. It's not there. So all of a sudden, we got this whole structure being changed right here. We got lows happening, and we're tracing up and making low, and then the gravestone doji, right? The gravestone candle appeared. So now that we know this, okay, that potentially the market was uptrending, and it did, but now we have a reversal happening. So now we have to change our tactic here. We're going to go down, and first we're going to mark what caused this high right here. And we're going to block off an area that we call, okay, we're going to block off an area that we call order block. Okay. This is our order block for the daily time frame, which is this black candle. And whenever you see the easiest way to find this area is to take a look at these strong upward candles, okay? And we also call it an area of origin, where from this particular point, a lot of buyers stepped into the market and created a frenzy or momentum where everybody decided to, I'm jumping in the market. Because the more buyers you have, the more the market goes up. Okay, everybody's trying to get into the market, and when you have all that excitement, things like this happen. Okay. And from this particular point, we mark this from usually from the top of the wick to the bottom of the wick. Right? We may have to adjust it as we go down to the lower time frames, because we want to find out where our fair value gaps are. Okay, because the fair value gaps, I taught this in previous trainings sessions, is an area where two wicks don't meet when there's a middle candle between three candles. So for example, 1, 2, 3, you see right in this area here, you see this wick and this wick. They did not touch. You have a middle candle here that separated the two. So we call that area a fair value gap. FVG. Fair value gap. Well, typically what happens is the market's got to come back and fill that gap before it trends higher. Okay, based on momentum, right? Because there's a lot of people that got into the market who missed it, and some people just missed it. So what the market has to do is got to come back and fill those orders and potentially go back up, or sellers might be aggressive on the top here and push straight through it and continue going lower. Okay. All right. So now that we know this, okay, we could go down to the lower time frames, okay, and wait for those fair value gaps. So this is where the patience come in, because there is another fair value gap right here. Okay, but as you can see, the market already filled that fair value gap. It came back and filled it. You see, it's already. If I was to stretch this all the way out to here, you see the market came back to fill the gap. See right here, it was up and then filled the gap, bounced off the gap, but didn't make a higher high. Okay. Now we're going to go down to the lower time frames, and what you want to do when you're finding this area right here, I'm going to mark it for you. So that way you guys can take some notes. This area is called an order block. Called an order block. And then this area is called, what is it called, class? FVG, fair value gap. FVG, fair value gap. Okay, so all we gotta do now is wait for the market. If you miss any point of getting in the market, okay, know this. All you gotta do is wait for it to come back in this area. And that's when you actually have to really know your candles. Because once it comes back to this area, you're gonna look for one particular candle, which is a bullish engulfing candle. Once you see that candle, you might consider placing buys, okay, entries for a buy. All right, but we know that the market's coming down based on the gravestone that we saw here. So there's a potential here to get into the market and ride it a little bit lower before getting to this area. So depending on the type of trader you are, if you are a trader that likes to trade pullbacks, this is a great way. You can get into a trade for pullback to this area. If you're a trend trader and you notice that the trend is upward trend based on what I showed you earlier, okay, you could take your trend line, and you mark it up from the low to the high and say it's an uptrend. Okay, all right. Now we're going to go down to lower time frames to now take a look to see what is going on in this market. Okay, now I'm going to go down to the 4 hour now. Okay, so what do we see in the 4 hour? I'm going to make some adjustments because we need to truly understand marked up so far. Okay, first off, we're going to make this adjustment and look left, always look left, and see where is our fair value gaps. We look left. There is one right here. All right, 1, 2, 3 candles. 2 of the wicks are not meeting, so we're going to call that a fair value gap. Okay. It's our fair value gap. All right, but then there's another one right underneath it, right? So we can literally copy, go into our box and put one right underneath it because there's 2 fair value gaps. And as you can see, the market pulled back and went right into those 2 fair value gaps, right? So we're gonna mark that as a fair value gap. So there's 2 fair value gaps right there, okay? So as you can see, it came and filled those gaps and bounced off and went higher. You see that? All right. Now, we're gonna also adjust our order block. So we wanna put it on the last candle before the movement higher, okay? Which is this candle right here, and the black candle right there. Right there, that's where I put the adjusted to that candle right here. Okay, because once you put that order block adjusted, as you can see, it starts to bounce off the order block. All right, going down to lower time frames, because we're trying to ascertain the market. We know it's an uptrend, so you want to try to get into the market on pullbacks, right? Remember, the rule of thumb in trading is you buy low, sell high. So you don't want to buy up here, okay, and you don't want to sell down here. You want to buy up here. You want to buy down here in these areas. Order block, fair value gap, fair value gap, fair value gap. You buy low, right? And then you're going to sell when it gets to the high. So you're going to mark your high, which is right here. This is your high. This is your sell zone. This is where you actually would, if you want to close out your trade based on buying it down here and it hits up here, you want to close out your trade for a win, right? A profitable trade. All right, so now that we know where everything's at, we have to now plan to enter the market, okay? Now, if you're a person who like to enter the market on reversals, okay, because you already know it's got to come down and fill these gaps, you have to decide where you're going to enter the market based on this particular pullback, okay? Now, the best way to find out where that is to open up this chart, okay? And you're going to set an area an area of interest, okay? What is an area of interest? It's an area where you can actually mark up, let's say right here, where there's a lot of activity. Okay, this is an area of interest. Some people call it resistance levels, okay? This area right here, where you see the market couldn't go higher above this ceiling right here, it kept bouncing, right? It did go up higher over here, but then it started to trend lower, and all of a sudden it's like, oh, it can't go beyond that point, okay? Once you determine that area, you're gonna want to find what class? Your fair value gaps. Here's a fair value gap. How do you know that this is a fair value gap? Well, 1, 2, 3 candles, right? Let's take a look at it. 1, 2, 3 candles. This wick and this wick did not touch, so therefore that area is not considered a fair value gap. Okay, and what did the market do? It trended right into or filled that gap, right? Fill the gap, and now it's trending lower. It's bouncing off of that gap, okay, and trending lower, okay? So that is where you would enter the market for a sell, all right? That's where you would enter the market for a sell, okay? Now, again, what was the area that caused this to reverse? Okay, well, you have to understand what a market structure shift is. Okay, a market structure shift is an area in the chart where the market breaks its upward momentum. Okay, and can you see right here where we had upward momentum? We had a high, a low, a higher high, a lower high, and then a higher high, right? But at this particular point, the market shifted. We call it a market structure shift because now this area is lower than this area. This is called a market structure shift. Now this whole area, okay, once you identify where the market structure shift is, you can prepare for the market to trend lower, as it was doing all along here, right? Now, but let me show you something. Because once that market structure shift happened, take away this red line. Let me show you something. What do you see right here? 2, 3, right? 3 candles, but there's a gap between those candles, right? This is what we call, you already know what I'm going to put on here, a fair value gap. Because once you identify where the fair value gaps are, you could prepare for a trade in this area. As you can see, the market came back and filled the gap more than once. One time, 2 times, right? Almost a 3rd time here. And what did it do? Went lower and created lower lows. Lower lows. Okay? Created lower lows. Alright? Because now, if I was to take this tool, you'll notice that's where the market structure shift happened. Right? That's what the market structure shift happened. Change of character. Try to make it straight for us. And you can mark it up as such. Market structure shift. That's where your market structure shift happened. Okay. And then continued to go lower. Right? Market structure shift. And then it continued to go lower. Need to go lower. All right, there's an area here. We call that break of structure. It kept breaking this line here. Break of structure. And is there another break of structure? Yes. I'm going to copy this, which is right here. It's below every lower low. Okay. So you can say this was a break of structure. Okay. And then it went up and came back down and made another break of structure. Right here. So put it below every black candle. Then you have another one. Right there. So those are all areas what we call break of structure. Because each time it went down, it broke that structure, it broke that structure, it broke that structure. Those are called break of structures. Okay. And it pulled back, right? And you say, okay, it's pulling back. All right. But it pulled back into a fair value gap. It's right there. Okay. So what happens when it pulls into the fair value gap? It's starting to bounce off of it, right? Starting to bounce off of it. All right. So those that are looking to place a trade going for sells, that's the way you would mark up the chart. Okay. To try to enter the market based on the pullbacks into the fair value gap, and then once it's into the fair value gap, what's the number one candle I told you to look for? You're looking for number 1. I'll show it to you right now. You're looking for a doji candle, which is a reversal candle, and a bearish engulfing candle. So these 2 candles are hints. They're already telling you the direction that the market wants to go. All right. So write that down on your chart. Okay. Doji candle, bearish engulfing candle. Once you see those candles, it's going lower. All right. All right. Now, that's on the 4-hour chart. All right. But for those of you who just, are interested on only buying Bitcoin, you're going to want to wait for the trend to go back up. Because right now it's just retracing back to this order block down here, right? So you may have to set an alert. So when it comes down to this area, you take a look at the chart, and then you want to go ahead and place your trade for, a buy. We're going to go down to the lower time frames, okay? Because right now it's all retracing. It's going, it wants to come back to these areas because it's got to fill the gap, okay? Either fill the gap or reach the order block, okay? Because now we're going to go down to lower time frames and see what it's truly doing, all right? Because we already know from the higher time frames what it's doing. It's retracing, right? So if we know this, we can go ahead and start saying, okay, look at this. It's retracing. Okay, it's not making any higher highs. Okay, because we already marked this out as a fair value gap. It didn't go beyond the fair value gap. It went into the fair value gap, bounced off. Okay, and now it's trending lower. Okay, but you'd want to get into the market on the 15-minute or the 5-minute. Okay, because if you could find entries, if you could place your trades in this area, okay, you'll notice that there's patterns on the lower time frames that you could take advantage of. Okay, very first pattern is this right here in the fair value gap. Remember, we marked it off. We see in this fair value gap a pattern. And that pattern is a head and shoulder pattern. So you also have to learn this as well. All right. This is a head and shoulders pattern. Whenever you see a head and shoulders pattern, it's a reversal. It's a reversal pattern. Okay, because as you can see over here, we have the shoulder, left shoulder, the neck, the head, and the right shoulder. Okay, and then you would mark this area like right at the neck, as you can see. It never went beyond this area, right? It pretty much tried to get to the area. It did actually, right here, in these candles, and then started to trend lower. Okay, that's where you would enter the market during this area right here. Okay. All right. So hopefully that was helpful. Hopefully you understood exactly what I did. We started at the daily. We marked everything up. We set order blocks. Now that we know what the most recent order block was on the left, excuse me, we went down to lower time frames and we looked for our fair value gaps where there's actually gaps the market has to fill. And we're going to be patient to wait for the market to come down to these areas. Okay. And fill these areas and hopefully give us a bullish engulfing candle, a doji candle, which is both reversal candles, and then we could potentially get into the market and ride Bitcoin to a higher level. Okay, because Bitcoin is ripping right now. Everybody's excited about Bitcoin. Bitcoin's not going anywhere. And this is how I mark up Bitcoin. This is how I mark up all my charts based on the pairs that I like to trade. And another thing I want to show you, I'm gonna just make a show it to you, which is your retracement tool. Since you know this is an order block right here, okay, you go to the bottom of the order block, pull this all the way up to the top. Okay, and the sweet spot in any retracement is 61.8%. Sometimes it will go down to 78%, even 100%. But as you can see on this particular chart here, the sweet spot was 61.8. It's Fibonacci. It's called the Fibonacci tool. And usually when the market gets to this area on the Fibonacci, it bounces off the Fibonacci retracement tool. Okay, and you find your Fibonacci tool on the left panel, which is a Fib retracement tool. And again, you take it from the bottom, you pull it all the way to the top based on the order block you just made. And it'll give you an idea that, hey, this is a sweet spot. Okay, once it hits the sweet spot, you want to consider entering for a buy, right? Now, there's another tool, which is the trend-based Fib extension. This tool, you use it the same way, okay? From the bottom to the top, pull it all the way down to the 61.8, I think it was, yeah. And this will tell you, okay, once the market had hit that range, that area, it needs to get to this area here, right, before it bounces lower. So this is a sweet spot area. This number right here, 1, sweet spot. Because if you can enter the market and ride that back all the way to this area, you've made some good cheddar, some cheese, so to speak. All right. But the same is true on reversals, okay? I'm not going to get into it now. I'll show you that on another training. But yeah, when it does reverse, you do the opposite. That 1 will be down here, and then you would ride it all the way down, okay? You know, potentially, hopefully get to that 1. But since we're looking for buys in this upward trend, what we're waiting for is the market to come to our fair value gaps, because it's got to fill the fair value gaps, okay? And then go higher. But you might be saying to yourself, wait a minute, but didn't it fill these 2 fair value gaps? Yes, it did, okay? So, but there's 1 more left behind, and there's also an order block right here. Okay, so will it come back down and hit this? I don't know. You don't know. For all I know, it could come back down to this area right here and bounce off this fair value gap again and go higher, heading towards this area where the 1 is. Okay, this area right here. Okay, but time will tell. You don't know until you know, because that gravestone candle is more defined now. If I open this up, as you can see now, it's really gravestone. Before there was like a little white part you saw, okay? But now it truly is a gravestone right there. And there's like 7 hours left for the daily candle to close, okay? All right, and if it truly closes at this particular candle, if it closes like this, okay, you can anticipate the next candle going lower to try to go back down to these fair value gaps, okay? So pay close attention to Bitcoin. Great things are happening. You want to take advantage of that, all right? It's all about, you know, entering, perfect entries. Please, please, please set your stop losses. That way you protect your principal, and set your take profits as well. Just don't get in the market and say, oh, I'm going to write it all the way up. Where? You need a destination, right? You need to set parameters. On your trading plan, you want to make sure that if this is where you want the market to go, you put your TP at 125, 125, 400. Okay, so that's where you set your take profit. So if the market gets to this level, it takes you out of the market before it trends back down, right? And now that way you secure your profits. Okay, that's important. All right. So that and then let's say, okay, and then you set your stop loss is below your entry. Everybody knows that. Set your stop loss maybe 15, 20, 25 pips below your entry. Okay, depending on your account size. All right. And then set your take profit. And then once your trade is in profit, move your stop loss to break even. That way, if it reverses on you, you didn't lose any money. Okay, you just got in zero if it hit your stop loss. And then as it continues to climb higher and higher and higher, you move your stop loss again, secure 10% of the profit, then secure 30, 40, 50, 60, 75% before it actually gets you to take profit. But if it reverses at any point in time before it hits your take profit, you've secured enough profit to walk away from the market with a bag. All right, so hopefully that makes sense. Hopefully you guys appreciate what I just shared with you today. This is what the financial gurus are charging thousands of dollars for, and you just got it on my channel, absolutely no cost. Okay, all you gotta do is rewind the tape and just do what I just did. Copy the right cat, great things can happen for you. All right, class, with that being said, thank you so much for watching. If you have any questions, any concerns, put in the comment area. If you have any particular subject matter you want me to cover, I can go ahead and address that on the next training, which is next Saturday. And I look forward to just, coming back on here, giving you guys some more nuggets that's helping me. Hopefully it helps you become a profitable trader. With that being said, everybody, have a great one. Thanks for watching. Give a thumbs up if you appreciate the content. If you like what you saw, give us a thumbs up, and I'll see you next week. Take care. Bye for now.